Hey, good morning, everyone. It's Eric Leigh, mortgage advisor with Guaranteed Rate in Boise, Idaho, and joined again by Charlotte Jean. Charlotte, how's it going
Hi,
today?
great. I'm enjoying the rain, not the snow.
Enjoying the rain. Yeah.
Yeah,
For those of you who haven't watched our Let's Get Real About Real Estate segment, this is just a marketing segment that we want to come to you and talk about the market. So, not so much marketing, but the market. And she and I are both in the Boise, Idaho area. So, Charlotte's a realtor here. I'm a mortgage lender here. And we want to bring you something new, something that you probably don't know or just maybe don't understand that we're seeing about the mortgage and the real estate market. More hyper local to Boise since that's where we work, but we have a lot of information we want to share with you. So, Charlotte, let's hop right into it. I think we'll just start. How about we start with loan limits? Because that's a big thing, right?
yeah, go for it.
Yeah. Okay, great. Well, here's the thing right now that a lot of people don't realize. So, the conforming loan limits, which when we say conforming, conventional, we kind of interchange those words, but we're talking about the regular cookie cutter Fannie Mae, Freddie Mac loans that you can get by just putting 5% down. And that's the first thing I think a lot of people don't realize, Charlotte. And I know you feel questions like that too. Like you can get a loan with just
Yeah.
5% down. Like a lot of people, that's just like mind blowing to them.
Yeah, they
Well,
see that 20% number and that's just what they have stuck in their head. So yeah.
that's right. So first and foremost, make sure you hear Charlotte and I say this. You don't have to have 20% down to buy a home. Not even close. So 5% down. Sometimes first-time home buyers can even get in for lower with 3% down, but we're not going to get into the weeds on that right now. However, here's what you need to know. That maximum loan amount that you can get where Fannie Mae and Freddie Mac insure that loan, massive increase from 2020. So for 2021, which lenders like me are taking applications on right now, is now $548,250. So what does that mean? That means that you can get out of some of the tougher underwriting requirements, which, Charlotte, we talk about jumbo non-conforming. A lot of people don't know what that means, but what that quite simply means is larger loan amounts, because you can go get loan amounts up to $2.5 and $3 million to buy property, but the box you have to fit into, let's just say it gets a little bit tighter and harder to get into. So when you're talking about what you see, Charlotte, let's again focus on the Boise area. What if you could just put a number, and I know you don't have those stats in front of you, but what percentage of your buyers do you think are getting mortgages that would be lower than $548,000?
Say that again.
Yeah, that's okay. Of the buyers that you normally would expect to work for, so if you take your buyer pool, like
Right.
what percentage of your buyers do you think would be less than $548,000 in loan amounts that they need?
I mean, there's quite a few buyers right now that are under that level.
Right, right.
Yeah.
And maybe you can share some of the price points too that we see in our area. Like what are the average sales prices, the median sales price points for our area?
Right.
What are those numbers that you're seeing?
So right now we had in November, the median home sales price for Ada County was 425,000 and the one for Canyon was 325,000. So, I mean, we had record limits or record pricing again last month. So
Yeah. And that's an important number that she just shared that you need to understand, because again, real estate's local, right? It's always hyper local to wherever you are. But in our area, the Boise, Idaho area, the majority of the sales are happening in this price range here. So you could still end up going and buying a house for $700,000 and putting down literally just a little more than $150,000, which is 20% of that. But you could also buy a home for $600,000 and just put down $50,000 or so and be into these conforming loan limits. So the thing that, again, we want to make sure people see and really understand is that 20% down myth, let's just bust it and knock it right off of the plate right now, right? That is not a reality. Now, when you start getting up into the higher sales prices, what we call those jumbo areas, much tougher to do and most often requiring 20% down. Not always, we don't want to get in the weeds on that, but I think this is a big change because like you just said, our price points in our area and the majority of the buyers that you're seeing, they could probably get away with a loan amount under 548,000.
yeah, for sure.
Okay. Well, okay. So let's leave it on that point. But again, let us know if you have other questions. But the second thing, and this is the thing I'm so excited to share with everybody about. So self-employed borrowers. A little tongue in cheek right here. In case you didn't know it, we're in a global pandemic right now, right? And it has created some massive clogs for self-employed borrowers. And for all the reasons that you see and hear about in the news and mass media, I mean, how many businesses are being forced to close by governments around the country, right? How many people are being told you cannot come to work right now because you're in leisure hospitality or you work at a movie theater or whatever? You've heard those stories, and we're not going to focus on the stories. But the thing there is, I want you to understand, is a lot of self-employed borrowers, their businesses are being impacted dramatically by the pandemic. So the underwriting guidelines that we had to work with as lenders through this had to change to make and take account for the reality of what the pandemic and government reactions are doing. So in May up through just this week, those guidelines were tough. And I don't want to even mince it. They were excruciatingly hard to approve self-employed borrowers. Relief is here finally. So here's the new thing that we have now. So what we do to evaluate income on self-employed borrowers, we're still going to look at your tax returns. That does not change, okay? We're going to get your tax returns for 2 years, sometimes 1 year, but we're going to take a look and start there. Then we're going to ask the borrower to provide a profit and loss statement. Now, this isn't an audited profit and loss statement that you need to get from a CPA that costs $3,000 to prepare. We're talking about an unaudited profit and loss that could be quite simple as you going into your QuickBooks, file, print, profit and loss statement, okay? So we get that. Then what we do is we get 3 months of your business bank statements, and we're gonna audit that profit and loss statement by looking at your deposits. So deposits aren't the same thing as revenues, but you can see where this underwriting guideline is going. If we take a 3-month view of your business bank accounts and we look at all of the deposits, we're going to treat that somewhat like revenue. And we're going to use that average calculation to compare to the profit and loss, to compare to the tax return analysis. And we're going to try to use that as our way to calculate what that is. Now, I want to compare that to what we used to have to do last week. We used to have to take 2 months of bank statements. Okay, that doesn't sound so bad. But we had to calculate not only the deposits, but the expenses. And we had to look at every single expense as if it was a business expense that recurred every single month and take the difference between the two and say, hey, that's your income. And it was just not fair because there's a lot of times that there's one-off expenses that we would have to document as such. If you paid your quarterly taxes, that's not a recurring amount, right? We should take that and divide by 3, right? So there was so many problems that came out of that way that we had to do it that, my opinion only, knee-jerk reaction from Fannie and Freddie to the pandemic and what we had to do to accurately underwrite self-employed borrowers, but really created an unfair way of evaluating them, in my opinion. So now that we've got some relief on that, where we just look at deposits into the business bank statements, I think self-employed borrowers are going to see a lot of relief from this, because there was a while there, I can't remember when it was, but they were estimating that the percentage of self-employed borrowers that were actually having their loans approved was less than 25% nationally. I mean, can you imagine that? Out of every 4 people applying for a loan that's self-employed, only one of them's getting approved? Yeah. Crazy, crazy. So
well, that's good news.
Yeah, that's great news, especially for loan originators, where we don't have to go back and say, hey, I'm going to need everything under the sun pretty much to be able to approve your loan. And it's still not a guarantee that you're going to get approved. It is just a welcome sign from underwriting, because finally cool heads are prevailing is how we're looking at this. So as you think about self-employed borrowers, and again, you're self-employed as well, right? You're a realtor, you're employed by yourself. How do you think that that's going to help? Do you see that kind of changing, I guess, the mood and mindset about purchasing right now? Because it's been a real problem on my side, and I'm not sure what you've seen. So,
I haven't had a lot of self-employed borrowers come through at this point. I think a lot of the ones that I was talking to wanted to put a pause just because they didn't know what was going to happen. The pandemic really hit a lot of businesses pretty severely, obviously. So there was kind of a hold on my side, just mainly because of that. But I think also because of that frustration of, well, I don't want to go through the effort just to get denied, right? So I think that this will help. And it's exciting. It's exciting because I know that I remember the last time we talked about it, it was one of the more popular videos that I ended up posting to my YouTube channel. Like, people were really thankful for the information. And this is probably going to help them even more. They'll be pretty excited to hear it. So it's good news.
Yeah. So consider this public service announcement of the month. Like, if you are self-employed, or if you know anyone that's self-employed and you've heard something in the news or mass media about how hard it is to get a loan these days, December 14th, 2020, it got a lot easier. So yeah, keep that out there. Share that with anybody you know, because it was just a game changer for us to be able to get that guideline relief, quite frankly. So yeah, no, well said, Charlotte. And I hope this news just gets spread as much as possible. So, because it's just a big development. So anything else you want to chat on while we have each other? Anything else top of mind that you think we should bring to everybody before we sign off for this time?
I think, no, I think it's pretty good. I mean, I think right now we're seeing, the inventory is still down. It's still tough for buyers. It's, if you're a seller, you're in a clear advantage. So just keep that in mind. If that's something that you have been thinking about, there's safe ways to sell your home in light of the pandemic. So just, that's just another little tidbit. It's almost Christmas, it's almost holidays. So I know that we're going to skip next week. So I wanted to wish everybody a happy holidays while we are here.
Yeah, no, well said. So Charlotte and I are always here for you. In fact, she and I were talking before we went live on here just about Christmas availability. I mean, we work whenever our clients need us. So if you or anybody you know is looking to transact real estate, they want to get pre-approved, they're pre-approved by somebody else and need a good realtor, or they need a second opinion, that's what we're here for. And we want to be available. If we don't get back to you on Christmas, just know it might be because we're taking a day off, but definitely don't use that as a reason to not reach out to us, because we're always here to answer any questions you have, or obviously if you need our services. So,
and there's a lot still happening. It's not stopped by any means just because it's the holiday. I know in previous years there's been a slowdown. I mean, typically there's a slowdown around the holidays and Christmas, just winter in general. That's not happening here now. So, it's still, things are still moving to still happen in market. So
yep, for sure. Pick up that phone and call us if you need us. So Charlotte and I, after we end the live stream, we'll go ahead and put our contact information in the comments for you to reach out. But the best thing that you can do to help us out, if you think this is good information, if you can think of anybody else that you know could benefit from this, go ahead and just tag them in a comment, or even better yet, take this video and just share it to your own profile so we can get the word out, especially about this great news for self-employed borrowers, because it's a game changer. We want to make sure that that's out there. We want to debunk that myth conception that it's so hard to get mortgages anymore, because it's definitely much better now than it was a week ago, 2 weeks ago, for sure. So, all right, Charlotte. Well, always good to see you and great to do this segment with you. Thanks so much, everybody, for watching. And we'll be back in 2021 with more great information and news for you from the real estate front. Take care, everybody. Make it a great rest of your day.